Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Let's get this thing going here. There we go. Oh, let's kill that volume over there. There we go. And let's get the chat line up. And as you can see, oh, you can't see. Yeah, we can see J4X. That's good. And right there. You see we're out in the wilderness there. We're hiding it. And there is the dollar index. You can see the dollar index is lifting even more. So I guess they are anticipating, look at it, the weekly. Now the fast had jumped through on J4X. The weekly had jumped through last week. We said we were going to see if this is a horse race. Right there. Yep. And we're seeing that pressure on the upside. There's a lot of question mark, I guess, out there. Not a lot of comfort, but a lot of question mark. In other words, they're not sure how to interpret what's going to happen over the next 90 days, I guess you could say. So, 90 days from now, we're talking about, we're talking August, September, October, November. We're, or at least say September and October, leaving us with the last 2 months, 5 months away from the end of the year. Congress doesn't come into session until, I believe, mid-September. The Supreme Court comes into session in October, so there's no real big decisions around the corner. Just economic news, really. And so that's to me, it's like as if I'm trying to race to the end of the year, but I think that's what the market is doing. I think they're racing to the end of the year. They're looking at it here now and saying, okay, what do we have to worry about? What risk factor are we in at the moment for? Let's see, I see the chat line. It's got a bunch of sneakers on it. Let's see. Oh, there we go. Now I can hear me. Happy August, Robin, to you too. Exactly. Happy August. Someone said it came so fast, and I was like, not really. It's just been marching along as far as I can tell. But it's all right. Everybody has their own perspective. So yep, it's August. The dog days, and I like how a lot of times we start off the August with a nice couple, like a cool week or something like that, and then everybody thinks like, oh my goodness, the season's starting to end, when in fact we're the second week of August makes us halfway through the summer, so we're right in the sweet spot at the dead center of the summer. Looking forward to the whole adventure as usual. That's the way we usually go around here. Just take it all in stride. So you can see here, the dollar index, it just keeps on climbing. And, I was thinking that we wouldn't see past the 102s. So I figured we would challenge this area right here. And we are getting there. We are challenging that area right there. I kind of would be surprised if we got through the 103s. Like 103.25. What's the high there? 103.23. 103.27. Yeah, I'd be very, very surprised if we got past those numbers. But then again, we were the same thing when we saw the yen go to 135. We thought, okay, this has got to be the top. I mean, we saw the bottom at 105, so we're like, 30 handle move. That's a pretty big move. Next thing you know, it's banging through 151. So, when you come to the central banks and you have this, what's the word? I want to call it lost price discovery. That's what I like to call it, lost. In other words, price discovery now is what the Federal Reserve wants you to believe, not what the fundamentals try to tell us. So they have this long song and dance about, are we going into recession? We're going to have a recession at the beginning of next year. Or, it was supposed to be 4 months ago. We had our recession. We're in the recovery at this point. We had 2 full quarters of minus GDP back a year and a half ago. And this is the recovery. And I guess they don't want to accept that fact. They want to walk around saying, hey, the economy is never went into recession. They'll say that. They'll probably tell us that it never went into recession when in fact we had 2 full quarters of minus GDP. And that's, to me, I just scratch my head, because you got to appreciate where the market is going. You have to accept the fact that we are already past the recession, and that we are in the recovery. And the recovery is very anemic. It's not very strong. The interest rates are relatively flat. That's probably, the dollar is reflecting that next quarter point increase over the next weeks and month, something like that. Because we have a September number, that there's all the talk in the world. It's being priced in. They're saying that, well, the inflation, is stalling out, and we're not worried about it, and they're probably not going to raise in September. Well, I think the market is reflecting that they could raise in September. That's what I think. The dollar itself is telling us that. Now, you can manipulate just so much, but when it comes to the bonds and the currencies, it's very hard to manipulate them. There's a lot of participants. Ooh, someone just said hi. Hi. The fonts is so small I can't read it. You might want to try to make your fonts larger. It's very tough to read. So yeah, that's where we're at the moment. We're going through the recession. This is the recovery of the recession. Growth is anywhere from 1% to 1.5%, 2%, something like that. We're growing jobs in America through government hiring. We're not growing jobs through private sector, and that's why everything is anemic. If we were growing jobs in the private sector, then you would see the economy looking even stronger and stronger and stronger. And what we're seeing here now is and that's what we're seeing now. That's exactly what we're seeing. Only increase in growth is through government, and that's bad. You know why that's bad? I know it sounds strange, but it's bad because government is taking money from you and me to grow, and that's not good. Government is no. You want private sector. You want the public to buy goods and services, and you want the private sector to increase inventory, and they won't as long as government keeps on growing and they're not. And that's what the problem is. It's very simplistic. It's amazing why they follow ideas from the 1920s and 30s still, because it sure doesn't work any. Remember, the Federal Reserve was supposed to remove all recessions. Created in 1913. And what has it done? We get booms and busts constantly. So that's what happens when you have a government agency trying to run the economy. All right, now let's go from there. We'll go over to the euro. Let's see what the euro is up to this morning. There it is right there on our screen. And let's put it up on J4X. Let's move that over out of the way. That's better. I think I see it. My name is Mohammed. Hey, Mohammed. Have you been in the market for years? Yes, I have. I've been in the market for 5 decades. So, been around for a while. Just an old dog. Just an old dog. Or an old cat. Meow. All right, there you go. You can see there's the dollar index. Not the dollar index. We want the euro. Euro on the wall. There's the magical euro right there. You can see it's been working its way down. Been trading currencies since the 70s, 1970s, late 70s that is, as a student in England. And then I had to trade my dollars around. And then when I came back to the United States, I started to learn about trading the futures contracts and the forward contracts. So, was a member of the International Monetary Market at the Chicago Mercantile, and also helped to create the cash options in Philadelphia, where they traded options on the spot itself, and we had to do the delivery thing. And Robin has a little bit more experience than I do. He's been around about, he's my partner at Chicago Quant, and he has been around over 50 years. He used to trade eggs on the exchange, and he was the first to declare a bid and offer on the S&P 500 when they invented it in the trading pit. So that's how long we've been around. We've been around a long time. Traded eggs, he's traded lumber, he's traded yen, he's traded S&Ps, name it, he's traded it. Softs, he likes softs. He likes cocoa, coffee, cotton, and so forth. All right, so from there you can see on the weekly, it is dipping down on our work here at Chicago Quant. That's the right chart you see on the right. And on J4X, you see the same thing. It's trying to dip down all those reds on a daily. Let's take a look at the weekly on it. There it is right there. A couple weeks in a sell already. Running ahead. It's not waiting for anything. It's taking off this time. And you can see the pressure that's on it. And, that's the, the dollar is slowly inching its way up. Slowly inching its way up. We'll see. We'll see how that plays out if it stalls out here. Statistically, when you go into August in trading, it can be so much more volatile and negative. So August, September, and October can be negative months, and then they start to buy it again. It's so hard to say depending on the currency or the stock or the commodity. It's a combination of all of them. So, you have up months and you have down months, but the weaker months overall are these months right here. So, I also have the happiness of being present in the club of professional and old traders. What could be better than that? This. I agree. This way you don't, your emotions are more under control, and your experience keeps you from doing things that would hurt you more. Exactly. I agree. So, let's see. Do you particularly trade anything particular that you would like to look at? We can look at it. I go through a rhythm every day. I go with the dollar index, and I go to the euro and the cable and the Swiss, and then from the Swiss I go to the yen. The yen I run over to the Turkish lira, and in the euro Turkish lira pairs trade. From there I jump over to the Mexican peso, and then from there we go to the South African rand, and then we go to the Canadian dollar, and then from there we go into the metals, and we go into the energies, and then the stock indices or the cryptos. So you're welcome to stop us at any time and go to what you would like to see, because I just enjoy the idea of variety is the spice of life as far as I'm concerned. So if someone wants to see Apple stock, I'll go right to Apple stock and stop looking at the euro for the moment. And then when they're done, if they don't have anything else to look at, I go back to the rhythm again. And so that's the way we work it here. And no question, there are no dumb or questions in trading and money. There are only long answers or short answers. That's the way we look at it here. And we're always willing to go back. If you want to see the dollar index again, we'll gladly go back to it. We'll go back to anything we may have looked at it once already. We'll go look at it again. You never know what you're going to find when you go and look at a second time or a third time or even a fourth time. So that's the name of the game around here. All right, from the euro, let's go over to the cable. We'll put it up on J4X first. That's the Dukascopy trading platform, and those lines that you see, we use the Hinky-Ashke bars on the chart, and then, like right there, and then the blue and the dashed yellow or light yellow is a slow stochastic. And the blue is a fast stochastic, and it matches up to our little dotted blue line. And then you can see the slow algorithm. These are our algorithms. They're not stochastics. They're smoothed by the stochastic, and so they look a lot alike. And that's the reason why they have the same trends. Ours are about I guess you could say Dukascopy on the J4X is about 68% of the time identical to ours. But they're just, and the reason why it's 68% is because they're behind. They don't. Our math is so leading that it can lead days and weeks, and it's very rare like this. This is kind of neat. We're seeing that pressure on the weekly right there on cable, and then we'll see over here. I don't know if our cable is even through the sell side any more than just the fast, and that is about it right there. Yeah, so it's through with no problem there, and it's been in a daily sell for 4 days. And you can see here when we look at it on a daily, you can see it's been in the sell for 4 days too. So that's pretty good also. And but that our math is just a proprietary math that we developed over the last 5 decades, using it for 5 decades now, and it just leads all indicators. We used to call this algo wars, where we were hoping that other traders would come in and try to show us a technical tool that they thought could outperform our work. And we were always glad to, we'll take a challenge anytime, and we put it up. Even on my chart, we'll put the competing algo. Or not in this case here, it's a statistic, or it's an indicator, or a function, or something of that nature. And we win all the time. But some get very close. And we find when you use a fast stochastic, like on J4X, against a slow stochastic, when one drops underneath the other, there's weakness. So in other words, you can see here, the blue is at 22. You can see the yellow is at 29. So the blue is underneath it. And what do you see? Downward pressure. Over here, on our work, all you needed to do is break the 0 line, and you get your downward pressure. Same thing on our weekly algorithm right there. So I hope that all gives you a good flavor. I trade using I trade using the trading style of Mr. Lance Baggs. The market movement and the type of currency dependence are very interesting to me, even as I was able to create an indicator. Cool. Let's see if we can find who Lance Baggs is. We're going to look him up. Do you recognize the name at all, Robin? Oh, I see something was sent over today, too. Thank you. Ooh. All right. Let's forward that. Oh. Okay. There we are. Sorry. All right, let's see. Lance Bagg. Or is it Bragg? Baggs. Let's see what Lance Baggs has to say. 3A 106 con round. Riker forgiven. I guess he's a market technician. Let's put that in there. Market research. Oh, is he from Philly? Technical analysis. Lance Baggs 30-day trading challenge. Day 17 YouTube. Okay.
Welcome to day
17 right there.
20 of the
Lance Bagg.
30 days to become a
Let's see what it says here.
I think these questions coming up
assessing
it's a quick review of whether
performance.
Your trading process
58
is
views
good so far, essentially. So without further ado, let's get into
let's
it.
see
Day
if
17.
we can find out anything more.
Are
you certain you're trading the best markets for your strategy? Are you certain you're trading the best time of the day for your strategy? Well, that's a good question.
So long. I'm trading 17 time constraints. And
let's see if there's a little bit more write-up.
It's pretty good, so we'll see.
That's
how that
4
goes.
months ago.
And the rest of it is an intraday, almost.
Watch day trading live.
So I trade when the major banks are open.
We're live
so
when we're on here, so
I don't see
let's see. Robin says name. Yeah, Lance Baggs. See it there? He was one of the very old traders active at the American stock market. I was a member of the American.
How confident are you that your plan can
I wanted to say I recognized it, but I don't have enough data. I don't.
But I would say I'm 6 out of 10 short.
Let me look them up on the American Stock Exchange, the old list.
More of them seem to win than lose.
Yeah, I was a member of the American.
and P&L is positive, albeit mildly positive
Lance
so far.
Bags.
How
American
do you know?
Stock
I don't know.
Exchange.
I don't have enough data. And
Which is
if
now
you're
owned
not
by the
confident,
New
what
York, which
additional
is
testing and
American
evaluation
Stock,
can you do to essentially improve your
which is owned by ICE.
I don't really do back testing anymore. I don't have the time to. And
There we are.
I did so much back testing as a beginner trader, and it just didn't
It's
work in
1G.
the markets for me.
Lance
It's
Bags,
plunging,
American
keep
Stock
failing,
Exchange.
even
Price
if I stop
Action
then.
Trader, book
So I just
by
focus on live
Lance
testing now and adapting to
Bags.
the market. So the key for me is going to be in my journal and
Let's
just
see what we got
reassessing
here.
good data and not changing too many things too quickly.
Farfetch.
Day 19. If you had to drop everything you've done so far and
Let's see.
start again, what would you change? I'd probably not use as many indicators. So quick run through, I use the VWAP, the H120. I also use EMAs on the daily, so the 50, the 100, and 20. I use the Asian session indicator.
Let's
So
see.
to me, that
Securities
feels like a
Exchange
lot.
Commission.
Sometimes I feel like there's a lot of indicators on my chart.
So,
But the reason I use all of them is I've had experience in the past where they've all worked. So I want to gather as much data as possible and then see which ones work best and get rid of the ones that don't.
Lance was
Also,
incorporated in
Fibonacci,
North Carolina
if you see that
Corporation in
as an
1926.
Is there any reason why you wouldn't explore these changes now? Again, I need to
Oh,
be
maybe
sure
it's a
what
company.
works, so I can't just get rid of something.
Maybe it's a bag
in
company?
case it does work in future. And finally, for day 19, make sure you're not persistent with something
Oh,
that's
okay.
not working.
Because I can see it's
simply
Form
because you
10K.
put effort into it.
Lance
Essentially,
Inc.
Don't fall for the sunk cost fallacy. If something's not working, don't use it. But in my journal, I have tabs for each
Australian
indicator I
trader.
use
Oh,
to see the effectiveness. And if there's something that
Okay.
only works one time out of 10,
An Aussie,
best believe
cool.
I'm not going to use it. Now, day 20.
Let's
final
try
day
that.
on this review.
because you must
Has
have
your
a.
performance
We have like
improved
we have a
in the last 12
website.
months? Definitely.
Like
I
you
think
know,
the first 6
you
months
can
over the
see
last
about
12 months, I
ours.
was about
Here.
12% down on an account, which
show
was
you
just
ours.
a slow deterioration,
Around here
just
somewhere.
losses.
There it is.
And since November, I think every month has been profitable.
No,
possibly.
that's our
Not every week.
platform.
I think I've had 1 or 2 losing weeks, but again, only small profits. So I'm
Let's
not
see,
going to be worried about
trading.
anytime soon, but it's certainly improved. Next question: if you have been actively pursuing growth but not achieving it, why
Let's
is
see,
this?
where are we?
I do think I could be a lot further along than I am now, and I think I have
Let's
a
see,
tendency
we were on
to
here
change
somewhere.
things too quickly. And maybe
Here,
not
we'll show you our
detach from the
website.
process, not detach from the P&L easily enough. So that's something I need to
Not
change
there,
and work
not
on.
there.
And just silly mistakes.
That it?
Sometimes I'll just take not particularly catastrophic trades, but I
Alright,
might
let's
take
try
a
this.
0.1 loss on a trade that I shouldn't have taken. So that's probably holding me back. And final question: are you asking
There
the
we
wrong
go.
questions? Are you operating?
There's
on
our
assumptions
website.
of which may not be
So that's what I'm saying. I'm
I put
trying to
possibly because
find
you should always be
his
humble and
website.
think you might
Does
be
he have a
asking the wrong-
website?
but Right now, I don't really think I'm asking the wrong questions.
try this.
I just need to stick to the process and journal my trades. So that is it.
I think
This-
that
till next time, thanks for watching.
that's a bag company. I think that's what it was. Let's see, Trader Australia. There, posting from trapped market participants. Price bar reversal patterns. So your trading coach review. Your trade. Okay, here we go. BEGGS. That's what it is. There we are. Here we go. There we are. There's Lance. Lance begs your trading coach. All right. What is an excellent product? As someone who has been trading for 10 years now, I have to say that this is the best value of money trading spreadsheet that I've come across. I really love the expectancy formulator. Okay. That page is addictive. You really should raise the price. Okay. Interesting. Let's see. Author of YTC Price Action Trader. Owner of Price Action Coach. Huh. Okay. There we go. You're tradingcoach.com because you'd rather be trading for a living. No longer active. Please see here the article. Let's see. Then end of the line, temporarily offline, back in April. Okay, we're coming up on 3 months since I decided to take on an extended break from regular posting, so I guess it's time to make a decision. I hoped that a break would refresh me and regenerate the passion that once existed for this adventure. He's only been trading 10 years. What's he screwed up for? Unfortunately, that had not been the case, so it's time. I've shown you the path, yet very few take action. Keep the opening simple. Let's see. Effective the 31st, I've decided to take a few weeks off. Okay. Trading process strategy. Oh, here we go. This is what we really want. When the market open is narrow range sideways chop, I like to expand upon a little side comment made in the 5th image. Okay. Trading off news, reaction, highs and lows, breakout, entry. Okay, he's got a bunch of different opinions and so forth. We're a lot more simple. We just throw a chart up. It has rules, and you can't change them. They are what they are. Okay. Always glad to hear about somebody, and this is who we are. And trading method right there. You can see it's very short right there. Quant trading for everyone, beginner through advanced. Avalon trading signals indicators are easy, read, and followed. Illustrated by the way all traders can understand. A 4-dimensional fractal geometry, all movement smoothed by stochastic standard deviations, binary and symbolic algebra with Gauss and Euler. The algorithm has been used for trading for over 40 years. There you go. That website's about 5 years old now. We have now an interactive service. So we got to change that. And so coming soon, we have a interactive service itself now. So you can, matter of fact, we can show you the interactive service. Service. Here, we'll show you our interactive service. If we can get to it. What's up with this? There we go. And let's see. Let's go like that and get rid of that. And we'll go like that. There we are. And here's our interactive service now. So in other words, what were we looking at? We were looking at cable. We have cable in this? I don't think we have cable in it. Here's like the S&Ps. We have the SPYs. We have corn. This is mine. I use and I just load it up with all kinds of things. And so there's the VIX. And you can see our histogram. Went into the buy yesterday. It's failing again. There's the weekly. It's been in a weekly sell for a while. It matches up to the same all in this one screen chart like that. If we go over to the S&Ps, let's see, where's the S&Ps? Right there. You see it's been in daily buy for 3 days, holding up. That line is above it. We go like this, and you can see it was plus. So plus and plus and plus with the green line through the 0 line. There's the manifold. You can see all our work, and green and red dots and so forth. Let's see. Here's gold right there. Maybe it's getting into the buy today. Look at that. It's trying to get into the buy today, and it's down no less. But we are in the weekly sell. So, oh, that's right. We're in a weekly buy for 3 weeks. So you don't want to sell this. Definitely don't want to sell this. It's 3 weeks in a buy. Then when we go over to, give you a good example of it all. Where is it at? Right there. There it is right there. Trying to get into the buy there. And you can see 3 full weeks in a buy. Heading for a 4th. Just like we are right here on the interactive chart. Right there. And the yellow bar will pop up at the end of the week. I think. You know what? Let me just. Nope, that's this week. Yeah, it is. Okay, so it's just showing 3 weeks on there. We'll have to check what that's all about. And that is our interactive thing there. But that's all we do. Let's see. He wrote 6 volumes of YTC book. Ooh. 6 volumes? Have you ever heard of John Murphy? John Murphy has written like the technical analysis. He was an old E.F. Hutton, since you're older. He was an E.F. Hutton technician. Then I think he was with Schwab. Not Schwab, I'm sorry. I can't think of the name of it now. Not Schwab. It started with an S. I think it started with an S. Anyway, they all got bought out by big banks at this point. But he was with some of the old brokerage houses. Maybe he was with Bear Stearns, too, at one time. And what he did, he wrote a book. He was on CNBC and Financial News Network for decades. And he has a book out there. It's like the Library of Technical Analysis. Let's see if we can find it for you. We'll put it up on the screen here. John Murphy. If you would like to read, and he's well worth reading. John Murphy. There it is. Technical Analysis. Right there. John Murphy Technical Analysis. Shop low prices. Right there. The Technical Analysis. And he's updated it until he passed on. It's a great encyclopedia of technical analysis. Very accurate. There's like, what is that? That's back in 20. This is an updated one in, what year is this? I'm not sure. Which one is that? That is August. He has a bunch of them out there. They're just updated. They're not any different. It's just that here's one in 1987. He wrote the book back then. There's one like in I think he started writing these things like in the early 80s. So John Murphy, well worth, if you have a hunger to read way back, John Murphy's the way to go. And maybe Biggs is too, I don't know. But I've never really heard of him. Yeah, John Murphy is he's one of like the one of the most famous market technicians through the change of the era, from the 70s to the 80s to the 90s. I think he just passed on about 5 or 10 years ago. At that point, he was probably in his 90s. I bet he was in his late 80s or 90s. I wonder how old John was. I met him a few times. I used to be on the Financial News Network as a guest every couple of weeks. Let's see, John Murphy, composer, no, market technician. Let's see, market. John Murphy, technical. Okay, there it is. John J. Murphy. I think he passed on. Is he alive? Technical analyst. J. Murphy is an American financial market analyst and is considered a proponent of the Intermarket Technicals Association. I see, River Ridge, New Jersey. Let's see. Who is John Murphy? There we go. No, that's not him. Maybe that's his son. No, okay, that's the president of Coca-Cola. There's his books. Huh. Yeah, I think he's passed on about 5 or 6 years ago, 7 years ago. All right. So there we go. That's like I said, there are no stupid questions in trading. We will, get involved in almost anything at this point. I will definitely buy his book. It was always a pleasure for me to get to know the different views of older traders towards the market. Yes, without a doubt. Our experience, both Robin and I traded through the crash of '87 in the trading pit, in the S&P trading pit itself. Let me think. At that point, I had been in the market as a member like 7 years. For Robin, I think he'd been a member for like 10 years. So we were veterans when the crash came. So yeah, there's not many Not many techniques and so forth that I have not seen, but there's some. There's always somebody out there coming up with something, you know. So we're always glad to hear if someone has a name or a market technician or something like that and wants to talk about them and wants to know more and explore it. We're always hungry to take a look. We're perpetually hungry to do that. No problem whatsoever. All right. From there, I guess we should go on to, where do we go on to from here? Let's go on to let's see, where were we leaving off on J4X? Oh, cable. Unless someone wants to see something, we'll go on. We'll just follow our rhythm. But if you want to change the conversation, we're happy to do it. We have no problem at all changing the conversation. And doing whatever any viewer here wants to look at or talk about. That's why we enjoy doing the webinars. All right, so from there, let's jump over to the Swiss. See what the Swiss looks like this morning. There it is right there, the Swiss. Still climbing in a daily buy for 3 days. That's why we put the dots in, just to re-emphasize. See how it went through the zero line? There's the zero line on a daily. And then down below is the weekly algorithm. It's been in the weekly cell since up in here. It reconfirms each week until it doesn't, and then changes directions. In this case here, you can see the fast has jumped through. Let's put it up over here on J4X. There we are. Nice. Okay, so you can see here, it's also in a daily buy for 3 days. You can see the blue line is trading in the 88s, and the dotted line is at the 81, or the slow is at the 81. So it's doing that. That's the zero. This is the zero line. This dotted line, really, in a sense, it's like a three-dimensional one. Whenever it's above the dark blue one, that's bearish, and when it's below it, it's bullish. And it's below it right now at 81, while the other one's at 88. Now we go over to the weekly and look at it the same way, with the Hinky ASCII bars on there again. And also the Hinky ASCII bar has to be green at the same time for the long. In this case here, you can see it's trying to get into the buy, same as we're doing right there. And you can see it's at 33, and you can see that the slow stochastic's at 22. So there's pressure on it, and it's telling you to try to be long because the pressure is on it. I'm more conservative, and I always try to recommend following our math, because this can be lagging, but it can help. Using the J4X platform can, when you don't have our work to look at, this is very, very good tool. It's better than MACD, better than moving averages, better than RSI, better than parabolic. They always beat just by using a fast and a slow stochastic combined together with the Hinky ASCIIs. Let's see. All right. So now from there, we go over to bing a bang a bongo. From the Swiss, we go to the yen. And there's the yen. You can see 3 days in a buy there. You can see the weekly slow is breaking through the bottom manifold here, but still in a minus. The histogram is minus, but it's trying to lift up. Could be next week's work, as they say in the hedge fund industry. And let's put it up over here on J4X, right there. You see it's turning into the green also, mainly like this one is already through it. And at the same time, when we go over to the weekly, and you can see the fast is at 62, the slow is at 49, telling you that the buyers are coming in. And then you can see here on a daily basis, 2 days now on a daily buy. And you can see the same thing. It's at 90 with the blue line, and it's at 67, which is a pretty big gap. So, that's the strength we see there on a daily basis too at the same time. All right, now, old brown cow, we go to the Turkish lira. It's like a live it's like watching a live experiment in a laboratory. And you can see here it's been moving down on a daily for, in this case here, 7 days. Is that right? Yep, that's 7 days. And you can see here the blue is at 23 and the slow is at 22. So it's trying to make the turn. Now let's put it up over here on Chicago Quant. Let's see right there. As you can see there, we've been in a daily sell now for 3, 4, 5, 6, 7, 8, 9 days now. A few days more than this one. That's why we say it has a correlation of about 68%. And it's very rare for it to lead. But sometimes the weeklies can jump around like that and then get whipsawed. That's why we follow our slow more. Now there's the weekly. You can see the weekly's been in a weekly buy for a while. You can see it here, no problem, at 76.7. And this is at 87. So it has dipped underneath. But on our weekly at the moment, let's move that line back up to the 0 line. It has not. Not even our fast is breaking the 0 line yet. And both of them have been in weekly buys for, like, there it is right there, since late March when it was trading around 20. And you can see where it's trading now. In that weekly buy, it has gone as high as 31 right there about 2 weeks back. All right, now from there, we slide away to what we consider the top brick, and we call that the Mexican peso. And we're looking forward to the August 22nd to the 25th brick conference, so we can get a better flavor if the Mexican peso is going to be part of the BRICS. The president says it is, so we'll see if they make an announcement then. As you can see right there, right there it is. You see just a little teeny bouncing back up. This is like a 7-year low. In other words, when it's gaining against the dollar, it's going down. This is dollar Mexican peso. And you can see the weekly is trying to dip its way up. The fast has made it through for the first time since, like, what is that, late March. And as you can see right there, the slow is moving slow. It's not really lifting that much. And over here on, where's our lines at? Nope, that's not it. Right there, there they are. You can see the blue is at 25.6 and the yellow is at 22, and we would just like to see a green form up to show that strength coming in. Let's see. Goodbye for now. Hope to see you again, friends. Oh, sure, you're always welcome. Mohammed, catch you some other time. Have a good, safe trading day. Bye-bye now. Okay, so from there, where are we at this point? We're looking at, that's the Mexican peso. We jump, thank you. Oh, that's Robin. Yes. So from there we go to the South African rand, which we think is the second strongest brick. And you can see there it's been in a buy for 4 days, which usually means when it's going up, it means that the gold is going down. And at the same time, the weekly is pointing that it's been in a sell and saying that the overall strength is in gold now for like since back in mid-June. So what we'll do is we'll go over and look at the gold contract. Right there. And there's the gold contract. And you can see since mid-June, let's see, let's just tighten that up a little bit. Since mid-June, it was in a weekly sell and kept on going down in value. And then, like at the end last couple days of June, it bottomed. Went into a daily buy. And it started to play with the upside more than the downside. It belongs right there. And then it went back into the buy right here in the first week in July. And it's been pushing up in price. And let's go back to the South African rand. For that same time period, the rand has been going down. That's what it does. It gains against the dollar. When it's going down, this is a dollar-rand pairs trade. So what happens when it's going down, it's gaining against the dollar. Now, the last couple of days, it's been trying to lose against the dollar. And we go back to the gold. And the gold's done the same thing. It's sold off that day, and then now it's right back down. But we are flirting with a daily buy, and we've been in the weekly buy, so maybe this is a good buying opportunity. If we close on a daily buy, probably a good trade might be hiding right there. 8.5 out of 10 times, it'll make money. Not sure how much, but it makes money. It's always something. And so if you buy it and then you have a good stop in, or you marry it with a put, then you're very comfortable to try to ride it. All right. Or you buy like a bull spread in it, binary. All right. From there, we slide over to the Canadian, which we look at the energy sector. So we're going to throw crude oil up right there. You can see crude oil has been strong since way back since late June. Now let's go over to the CAD right there. And since late June, see, it took off, then sold off. And then now it's trying to take off again. The selling off was representative of strength in oil. But this moving up was going in the wrong direction. We were confused by that then. And now it's been trying to rise again. And it's still confusing since we see that oil has been pretty much on a tear from the 66, 67 area, 67, 68 area. It now is trading as high as yesterday at 82 and change. So a $15 move not being reflected very well with the Canadian. All right, and well, you know what? Let me have a sip of my tea. We've been a chatterbox today. All right, so from there, what do we do? Where do we go? From there, that's right, we're in the energy, so we'll look at the back month. So the front month is at 81.18. We'll call it 20 since it was 19. 81.20. And the back month of November is at 80.27, so we're looking at 93-cent premium. Obviously, they want to take delivery of this stuff. They're hungry for it. And then we run over to, excuse me. I think I'm going to put a piece of gum in my mouth because I just feel a little tickly throat. There we are. So from there, you see the crude oil, being very, very strong. And then we jump over to natural gas right there. It looked like it wanted to take off this morning, but it has failed. Look at that. It is rolling over like there's no tomorrow. And that's a good thing for us people who buy energy. We want it to be cheaper, not more expensive. Not long energy. Buy it and sell it to the customer. Energy. And there it is right there. Now over in J4X, we put Brent up there. And then, because we should have done Brent right after the crude, light sweet crude. Right there. There's Brent. And as you can see, the weekly has been in a buy for 5 weeks now. And let's see what the daily looks like. There's the daily. Oh, yeah, look at that. 3, 4, 5, 6, 7, 8, 9. Is it 9? 3, 8. 8 days in a buy. And 9 out of 10 days in a buy. Then we go over to Chicago Quant. And we can put it up on here now. There is Brent. Where are you, Brent? Right there. I think that's it. Let's double check. There. Huh. Is the September contract gone? What's up with that? That doesn't look right. What is that? No, that's something else. I know I have Brent on here. I found it. $. Could that be it? That's a bond, I think. Yeah, that's the bond. I could have sworn I found Brent. Darn. Didn't I tell you, Robin, that I found Brent? I thought I did. Let's see. There's the DAX. There's the Euro. There's dollar index. There's VIX. Let me go see what the Brent is. I want to see what Brent is in our work. Brent. Right there. Right there. Brent. There it is. That's it. Yeah. BZF. Oh, I could have sworn let's see. Does that do it? Maybe I have to put BZF in there. It's not lighting up. Oh, there it is. Okay. All right, let's try this. We'll put BZ. That is BZF. No, it isn't. All right, let's try to put BZF in there. Let's see. BZF. I could have sworn I put it in there. I could have sworn it was working. Right there. BZ was it BZ equals F? Okay. Equals F. Save. All right. Now, let's go back to home. Oh, there it is right there. There you go. Okay. Is that right? No. Home. Now. Where's it at? Let's give it a spin or something like that. There it is. Huh. Why is it not giving us... Alright. It's not giving us that either. I don't understand that. Why are we not seeing this? Because I'm seeing it here. And yesterday I had it. Oh well. Alright, we're going to skip pushing on it. I'll go find out why it doesn't want to do that. So from there... maybe if I do that, let's try that and then try opening it again. I just like to see where our work is with that. All right, from there, we were looking at natural gas. It's the Brent. You can see it up on J4X. And from there, we slide over to the Spanish company in Spain, the energy company there, and see what they're trading their stock at. That usually matches up to natural gas. So, let's see, where's it at? Right there. Trading in the 27s. It's been kind of stuck in that 27s area for a while now. Alrighty, traders. What else can we say? We're getting to the end of the road. So we got to get out of here for the trading. So, traders, we will catch you tomorrow. Same time, same channel. This is Doc from North America saying, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, later, traders.